The latest unemployment, wage growth and inflation figures here in the UK will grab a lot of the headlines on Tuesday the 15th and Wednesday the 16th of June respectively. But the biggest macro story of the week is likely to come in the form of the latest monetary policy decision from the US Federal Reserve on Wednesday the 16th of June. The Fed is moving to sell $20 billion or so of the corporate bonds that it bought last spring, and one or two officials are gently floating the idea that the US Central Bank may need to think about tapering its quantitative easing or QE program at some stage. But no one seems to be in a hurry, least of all Chair Jay Powell. The Fed continues to assert that the current spike in inflation to 4.2% year on year is, to use its word, transitory, and the result of both the base effect and bottlenecks caused by the reopening of the global economy as lockdowns begin to ease. As such, there seems to be little chance of the Fed talking about interest rate rises or easing back on its $120 billion a month QE scheme. But economists and investors will be looking for even the tiniest indication of a shift in policy momentum. For the moment, the headline Fed's funds rate is 0.25%, where it's been since March 2020, and the total assets on the central bank's balance sheet comes to $7.9 trillion US dollars, some 90% higher than before the start of the pandemic. Back here in the UK, we have a busy slate of scheduled corporate news, although much of it comprises annual general meetings at which firms may or may not offer a trading update. Besides those virtual gatherings, results which may be worthy of note and further research include the following, although do please note that these dates are potentially subject to change. Recruiter S3 on Monday the 14th of June, multi-utility Telecom Plus, house builder Bellway and online retailer Boohoo on the 15th, another online retailer AO World on the 16th, Dr. Martens, hotelier Whitbread and Halfords on the 17th, and to close out a busy week for retailers, Tesco and Inspecs on Friday the 18th of June. But the company which could just cause the biggest fuss in the week ahead is equipment hire company Ashtead. The FTSE 100 member is set to release its full year results for the year to the end of April on Tuesday the 15th of June. The shares have continued their phenomenal long run in the past 12 months, more than doubling in the past year to set another fresh all-time high. Remember that Ashtead gets around 90% of its sales from its American Sunbelt operation, with the bulk of the rest coming from the A-plant business in the UK. An economic upturn in the US, President Biden's infrastructure plans and a booming American housing market all seem to underpin Ashtead's relentless share price rise. Just look at how the share price seems to respond to the Institute of Supply Management's Purchasing Managers Index, or PMI, for manufacturing, for example. A recovery in US housing's also helped, although the US National Association of House Builders Index does appear to be flattening off a bit, and that's a trend which may need to be watched. Anyway, the full year results should be informative for what they say about Ashtead and not just the US economy. Analysts and shareholders will look to three headline figures in particular. The first is sales. On a stated basis, analysts are looking for revenues in the full year to April of around £4.9 billion, a 3% drop from last year's £5.1 billion. The revenues came in down 7% in the first quarter, flat in the second, and down 1% in the third. Also note that Ashtead will release a number which adjusts for foreign exchange movements, and using this metric, the fall in the first 9 months of the fiscal year was 3% year on year. The second headline number is pre-tax profit. Percentage growth had been running pretty consistently in the teens before the pandemic, although the rate of advance had slowed a little bit. For the whole year to the end of April, analysts are looking for a 14% drop in stated pre-tax profit to just under £850 million, the second straight drop in annual earnings, ahead of a sharp recovery in fiscal 22 that analysts currently think will see profits return to almost pre-pandemic levels. The third quarter, by the way, showed just a 4% slide, so analysts are expecting momentum to continue to improve from here onwards. Finally, analysts will home in on the dividend. Last year, Ashtead surprised a bit by increasing its full-year payment yet again, extending a run of annual increases that dates back to 2005, and it did so despite the pandemic. Analysts have penciled in a very small increase on last year's payment of 40.65 pence per share, before a bigger rise in 2022. Note that the interim payment came in flat at 7.15 pence a share. Ashtead actually recommenced its share buyback programme in May to the tune of around £75 million per quarter, so shareholders may look to Chief Executive Brendan Horgan for an update on that. Investors will also keep an eye on bolt-on acquisitions, which came to £453 million a year ago, and particularly capital investment. If management's feeling bullish, then it'll buy more kit so it can rent out more kit. Mr. Hogan had originally guided to spending of £500 million for the year just finished, down from £1.5 billion, but he's since raised that to around £675 million. Maybe more interesting number still will be any budget that he gives for the year to April 2022. I hope that you and your family are all in good health and good spirits. Thank you for listening, and I look forward to talking to you again next week.